Good morning, good morning. My name is Scott Bradley, Chief Strategic Officer at TVLive.com. It is 6:30 at my time. It is September 6th. I hope everyone had a great Labor Day weekend. You had some fun, you ate some food, you did some fitness. I know for me, I probably shouldn't be drinking the next few days. I got to do a little detox, get myself back on schedule here. You know, at this point, I've run into so many different people over the weekend asking me so many questions about the market from so many different demographics, which we'll get to. First, I want to say hello to some of my dogs around the world. Anybody tuning in? We got anybody so far? It looks like 130 people coming in. We got Kinetic in the house. I'm going to put the S&P weekly chart up so you guys can just take a look at it while I say hello to some of the dogs around the world so you can see some different time frames here. What up, Minnesota? What up, Florida? What up, P-Train? What up, Sarasota? How you guys all doing out there? Good morning, Tisha and Joe. What up, Lake Tahoe? Oh, Lake Tahoe is very pretty. The UGA Dogs National Tennis. All right, there you go. I actually did a Peloton one time this weekend, and this song was on. It was like a massive hill. Kendall was teaching the class, and I took a picture of it because while I was doing the hill about 25 minutes into the class, I was just thinking about the year, thinking about the next few months coming up, thinking about what I have to do to be prepared in order to execute, embrace the action, because I know a lot of you guys are starting to get a little worn out. You cannot get worn out. Now's the time to get your game face on. I know this bear market, depending where you look, has been going on for a while. Yeah, Kathy Wood's ARK, bear market, or peaked 18 months ago. And then you have the S&P, probably almost 9 months ago. So there's been a lot of activity that's wearing you out. This is not the time to be worn out. This is when people step up and embrace volatility, and there are massive opportunities that are going to happen over the next, could be week, 3 weeks, 9 weeks, 12 weeks. So you want to make sure you're ready for it, okay? And you're in the zone to do so. So let's get down to it a little bit. What up? What up? Good morning. Listen, early innings of what? Alexa off. All right, so here's the thing. A lot of people this weekend are like, Red Dog, what's happening here? Are we going to retest the lows of the S&P of 3640? Are we going to make a higher low? Are we going to make new lows? What inning of this bear market are we in? All these different questions. Did Meta make its low of the year? Are the energy names going to still be a source of relative strength? Is the dollar going to finally, peak? All these questions. I'm like, well, what are you looking to do in the market? Do you invest long-term, intermediate term? Do you trade for a living? Do you, get a paycheck every month or quarterly? Or you just trying to prepare for the long term? Or, it's different for everyone. And all different ages. Listen, again, if you're a macro investor, just put money in every single month in the S&P, and over time, the bull market's going to win. If you trade intermediate, like my wife's BOS account, then you got to, buy when things are at extremes and have a tier system and a process. But if you trade for a living, you better, really know what you're doing. So at this point, I'm going to break it down real quick. So a lot of people, again, are getting a little worn out. Why are they getting worn out? Because if you look here in 2018, okay, this little bear market stretch went for almost 4 months, and then it bounced, and then you had an active sequence that went on for, a bunch of little mini ones, but overall for a year and change. And then the pandemic, right? The pandemic in February, we hit our peak, and then they hit your low in March, and then we basically started an active sequence that never quit. Okay, you know how fast that was? So if you look here, you hit your top in January, and now we're 9 months. 9 months of a few different active sequences where you could have taken advantage of it on the bullish and the bearish side. But bottom line is it's been difficult. It's been hard to find follow through. It's been all reverse sentiment trading. Some groups have been worse than others. Like if you look here, again, here's your high in the S&P. Some people didn't say, we were in a bear market here until April. Okay. And then if you go look at ARK on the weekly, this peaked out in February. So it peaked out literally almost 18 months ago. Then March, April, May, June, July, August, like a year. So this could have been a year before the S&P, before finally CNBC said we were in a bear market. A lot of names that people loved during the pandemic that thought were going to be the next 10 years worth of gains, we're in a bear market decline. Okay, and how could you have figured some of that stuff out? Well, obviously on the weekly, the 8 and 21 day, I teach a course on it, on how when you're above it, you want risk on, you want to be putting, multiple positions in the different sectors within that. And ARK was basically above the 8 day, almost, since the low was put in during the pandemic, all the way up to the peak in February. So it was like, I don't even know, like almost 13 months and above here. So this is when the ascending channel broke, and this is where basically the real trend changed. And then you were below the 8 and 21 day pretty much this entire time until you had that June divergence where SPYs and the Qs, everything made new lows, and the biotechs didn't, and ARK didn't. So that gave you some clues that the two sectors that led us to the lows were no longer making lower lows, so maybe we can get a bounce, and that's what happened in June. So we want to take a quick look now where ARK is. So here's 35.10, here's 39.79. We had a decent rally up to 53.86, and then you had a pretty big bearish weekly candle. So now the question is, remember, does this mean ARK is going to make new lows before the S&P makes new lows, or is ARK going to be a leading indicator with the bios? So I go, every different cycle is different. All you know is you had a move back to the 21 day, and now this area is kind of broken. So I would say if ARK can't get back above this spot, okay, which is like 44, chances are the higher the probability it does make new lows. And listen, there are things like people like on Friday, like Red Dog, can we buy NVIDIA? I'm like, well, if you're in the camp that the Qs or the S&P needs to retest the lows of the year, but it's not saying you're in the camp, because I don't even know what camp I'm in. I'm in the active sequence camp where I have to know my time frame and figure it all out and just see where things are to give me some clues. Well, you're not if you look in NVIDIA already is at new lows of the year. So if the S&P cash is going to go lower, okay, then obviously NVIDIA, it's not an opportunity yet to be buying it after it's one of the first stocks to make a new low. Okay, and then here you have 115, which is, someone asked me what's the next level below, and that's 115. But anyway, if you go real quickly back to just say let's just go back to more a term that we're looking for this week. Some guys like Red Dog, what does Friday's candle mean? I don't want to talk about macro. I don't want to talk about intermediate. I need to make cash flow, and I need to know what we're doing this week. Well, first of all, we're coming in this week with the oscillator minus like 77, which is always hard to be very short, because if it's minus 77, the oscillator is minus 40, you're always in kind of in a conundrum where you can get some kind of pushback move or an oversold bounce or in general, or they say right now the experts will say the risks are to the upside versus what this sequence is. So let's go back to real quickly to the S&P cash. If you go here now, instead of looking at the macro, which this is the weekly. Okay, first of all, just take a quick look. Some people are like, what could you have seen? Well, here, if you remember, that's when I put my wife's BOS account back to cash on this Red Dog reversal where we went above 42.80, came below. That's a Red Dog reversal after a big move. I've taught you guys that pattern. And then you had 3 candles to the downside. And so far, this is what 39.03. 39.03, write that down. 39.03 is the low from last week. If this market's going to go to 37.38 or 36.36 again or lower, what does it have to get below and stay below? 39.03. That's the number. I don't care what anyone else says. I don't care what Mike Wilson says, this says, that says. In order for the bears to be right, that's what it's got to get below. And chances are for them to keep control on the weekly, they can't let in the next few weeks the S&P get back above 4,057. Because that's where the moving average is now starting to curl down. Here they were in a nice slope upward. Then you had a few breaks here on the first move lower. It was below the 8 day this entire time until finally it broke above, which gave you a June oversold bounce. So 39.03. Now let's break it down one more step here. Let's go to the daily chart. Okay, daily chart right here. I'm just going to focus it in so this way you can take a look. Okay, first of all, since this. Remember I said like you have risk to the upside, risk to the downside. Well, if you remember right up here is where we were talking about the August top. That was when everyone started getting really bullish again. Tom Lee's like, we're going back to the highs, da, 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 da. I'm like, guys, we just had an active sequence from the Red Dog reversal here that went further than anyone would have thought. A lot of bears thought there's no way we could have gotten above this spot, which was like, let alone all the way to 43.25. So anyway, right here, this sequence changed. This is 42.53 was when most people took risk off. Some people got overly short, whatever. So now what? We've been below pretty much the 8-day ever since. So on Friday, which I wound up having a really good morning, 20 minutes because we got to one of my targets, and then I lost what I made all day long because I didn't think we were going to have just such a crazy reversal into a jobs report like that, where it was pretty solid. We were oversold. We had all the makings of holding up, but the bears said, we have a lot of power here. So does the power of the bears from Friday keep control of this week? That is what you have to think about if you're an active trader that maneuvers for cash flow, that's hoping to start putting together a nice September so you can get paid. Okay, so what do you have here? You have 39.54, 39.69, okay? These are pretty much two resistance pivots of this candle. You have the high from Friday. If the bears want to keep full-fledged control of the week, okay, they do not let the active bulls reclaim first 39.54. It could get to 39.54 and it's still not even 50% of this candle, so it's still just like a little bit of a bounce back. That can create an H cell setup. If it gets above 39.54, anyone who's still short from Friday says, I might have to cover a little bit because, again, from 43.25 to 39.03, maybe they were a little aggressive on Friday. I would say really 39.69 is the spot, especially if you see it today. Not saying we're going to see it today, but I'm just saying these are the two zones for the week. Today you can have a little bit of a bounce back. Sometimes it takes a few days. You eat away at the candlestick and start to retrace higher. Then all of a sudden, the psychology changes because you're pushing back this candle, and then all of a sudden maybe there's a zone here, and then it winds up taking that out at another point. But for now, to know whether or not, are we going to hold 39.03, which is what was that? That was actually Thursday's low. We put a little bit of a higher low, 39.06 on Friday. Question is, do we make a bear flag and continue to the downside? Okay, that's really what the thinking is for this week, because that's what you have to think about if you want to create cash flow. Right now you look at the morning futures, instead of having downside follow through, things are up a little bit, right? 395.10. So we're up 0.73. Europe wasn't up much, Asia wasn't up much, but they were bouncing, so we're up a little bit. 395.10. So for those of you who don't trade S&P futures, you can go to the SPYs. All right, SPYs right here. Okay, if you look on this is just on the active level. Okay, remember when I'm like, we can get to 401 if you're playing from the reversal, and a lot of people made some really good money, but then all of a sudden you got rejected into there. A lot of the 5-minute, ascending channels broke and went all the way back down to lows. So this is, I simplified. There's so many little retracement rules and RSI and all the things you can do. I'll say, hey, if this candle wants to stay in control, okay, and you want this bounce back to be feeble, right now the SPYs are at 395.10. 397-ish is pretty much like the middle of it. This low here is what? This is 396. This is 397. So you could say, hey, you know what? If the active bears want to keep the pressure on from Friday, come on, clickety click. All right, this is not even. Come on, play along here. There we go. So you can make it like a zone, 396 to 397. If you are in the camp and you've been making a lot of money shorting into bounces, because there's a lot of ways to make money shorting into bounces since this new fresh active sequence started, then your thing is, if it gets to here, you're going to reshort the SPYs. If all of a sudden it starts going through there, then hey, this might turn into a lower pivot, and perhaps, there are a lot of people out there saying we're in a bottoming process. What does a bottom process means? It means we're not quite there yet, and they're hedging themselves. We can go lower, but we're in the process. We can go lower, but I don't think we break the lows. Okay, well, 362 is all the way over here. That's 390. That's, what is that, 28 points in the SPYs. So you could be telling people we're in a bottom process, start buying now, and it doesn't break 362. It goes to 365. Can they stay solvent, if they trade for a living until then? No. That's why you need to know how to navigate. Like, I know a lot of traders out there, started shorting the market somewhere thinking this was resistance and a push through retest, and the whole way up, well, Mike Wilson says we're going to be in an earnings recession and the PE is going to decline, and all of a sudden, a higher inflation is going to take away earnings, and that means the P of the S&P has to come down. But meanwhile, we're in an active sequence all the way to up there. So could you have stayed short that whole time? I don't know. I know I couldn't. And then up here, if you finally said, okay, now I'm going to be bullish, instead of saying you were bullish here or here actively, because that's when most of the bulls came on TV, starting to say, oh, we're done going down, and now we're going back to highs, and all of a sudden, now could you stay solvent by buying this whole way down? So you got to know what you're doing. And then, if you don't trade for a living, you have to figure out how to piece in. That's a whole different story. So anyway, 390.04, so 390, 396, 397, here's 401. So just that the SPY candle has the same things as the Q's candle, and then you look at everything else across the board. Again, all I have here is I don't have a lot of time. I should really do like another hour webinar with Mike and go over time frames and stuff. But here's Apple. Apple, again, gives clues. Yes, it does. Apple is one of the strongest mega cap tech names out there, and they have their, I think they're doing their, the Wednesdays that they're going to go over their products and do the same thing. They usually they have an Apple event, they try and sell it. From what I'm hearing, they're going to do a refresh. It's not going to be, new stuff. It's just going to be refresh stuff, and it's going to be more focused on Pro, which is good. I'm hoping, we'll see. Apple also, I was long on Thursday, and then it got rejected right into the moving averages, 160.35. I kind of thought it would, could have went even a little bit higher, and it didn't. It hit 160.36 and then couldn't hold a prior high and closed near the lows. So Apple, you want to do the same kind of retracement rule. Will Apple push back and get back above 158 and all of a sudden have a lower area and be long versus 154, or does it go from green to red today? So I probably I don't know what's going to happen there, but you have to watch it. And I would say again, if the market's going to want to hold up today, Apple's going to want to hold up, and Apple right now is at 157.11, so it has room to 158.60, or there's probably this low here is also a pivot, which is what that's 157.14. So you could say to yourself, okay, will Apple give me clues on whether or not today's strength holds or not? So 157.15 to 158.60 is the zone. If it penetrates into there and closes okay and does it for a few days, we'll see. What's up, Punjab? How you doing? Good morning to you as well. So anyway, so that's a clue. Tesla's been not special for a while, so you haven't been able to hang your hat or hide in Tesla. Tesla's been weaker, actually, right? Tesla, broke down right here, broke below the 821 day. So that's when Tesla said, it's showing you that maybe it's a risk-off type of thing. Then you broke down, and remember I was doing the 6:30 call at 9 o'clock? It was trading at 281 to 282. I'm like, this is probably a fade. I wouldn't be chasing Tesla up here at 5. And meanwhile, that came in. So Tesla's chart is just like everything else. It's kind of rebuilding, and you have 3 lower highs, and it's back below moving averages is a big-time lower high compared to there. And, this is 254 where it broke out from. Here's the low from last week. Didn't quite make that low. And we'll see. Tesla's probably up. If I were to guess, if Apple's up $1.30 and the SPYs are up 3, not even looking at Tesla, it's probably up. I mean, maybe it's up 3 also, 3.5. So Tesla right now, look at that. It's up $3.12, 273. So it's in no man's land. Okay. Lately, traders are getting in trouble trading things in no man's land. They're shorting a little too early. Like if you shorted the SPYs on Friday at 399, not knowing that it can get to 399 to 401 and push higher. By the time it was at 450 or 401, you were probably covering it, and then you got out of the way and like, oh God, that was horrible. And then later in the day, you turn it on your computer like, oh my God, I was shorting that I couldn't hold for another $1 because I was shorting it in no man's land, and then I rolled over 8 or 9. Same thing buying. If you started buying a little early on Friday before that little push up at the end of the day, and didn't wait to at least do the retest of the Thursday low, you have to make sure what zone is a better or a higher probability that you could trade against instead of starting too early, because you could have the right idea, but your execution is poor and you can't stay for when things turn for that. So anyway, 273, not a whole lot to hang your hat on there either. It's not. This is not a very exciting open. If we were down 30, 40 handles after the reversal on Friday, maybe there'd be a viable move here. You have to be very patient again. XLE. Not really doing a whole hell of a lot either, where again you had a really strong trend earlier in the year, and then that trend broke right here. Remember that little doji? And look how fast that move was lower. The fastest moves are the moves that people don't expect. And then from here, you had a nice tradable move. I was in Oxy for most of this, so was a lot of people from the Alpha team and whatnot. And then this kind of is like playing with the trend, and this is starting to move, curl over, and just when everyone gets comfortable with the sector, the money seems to move. So we'll see what happens today. I think energy's down a little bit. What are some things that have been leading the market that you should write down this week? You should always have the TLT up. Have the TLT up, have the US dollar up. Okay, it's hard for the market to go up when the US dollar is going up. When the US dollar ticks down, some of the computers, start a little bit of a buy program. Same thing when rates tick a little bit lower, the yields. So that's been dictating the tape a little bit. Plus, you know what? Crypto has been a decent barometer on risk. And if you look at Ethereum today, Ethereum's kind of telling you that today's strength is not going to be sold. What do I mean by that? Well, if you look here, if you look at Ethereum, you had a nice active sequence. Remember 879, 995, and from there you had a nice, literally went up 100%. If you would have bought this correctly, you didn't have to get the low. You could have bought right around 1,000 versus 995 or 879, and you had an active sequence all the way up to 2030 before maybe changing there at 1815. But for now, look where Ethereum is. Ethereum is above Friday's high. Or not Friday's high. Friday's high, I think, was September 1st. Sorry about that. It's 1650. So right now, Ethereum is above Friday's high prior to the weekend. So does that mean the S&P needs to get back to Friday's high, or the Qs are going to get back to Friday's high? Doesn't mean it has to, but that should give you a little bit of pushback that if all you want to do is short the SPYs and the Qs and ARK and all that kind of stuff on the open, because that's worked since the mid-August high. Just know that Ethereum is saying, hey, there's a little bit more risk on here. I know that they did their whatever they did, the Ethereum 2.0, blah 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 blah. But this little thing in Ethereum says, hey, be a little cautious on just trying to fade this open, because sometimes that doesn't work. So just be a little. I would make sure you see divergence before you just start shorting things. Does that make sense to any of you guys out there? 652. I feel like I want to go over so many things, and just I'm only allowed 20 minutes for the 630 club, so I wanted to give you a little bit of a macro, a little bit intermediate, and then really more micro, because a lot of people again are like, can I buy this up open? What does Friday's candle mean? Does that mean the bulls are so fragile? Does that mean the bears are taking us back to the lows? What does that mean? I'm like, well, it might be that it was just a long weekend. The computers were programmed. They sold the strength, and it means nothing. If it means nothing, okay, which I don't think it means nothing, it means that today they're just going to blow through 396, 397 and get to 401. Or not. If it gets rejected here and turns lower, then this candle means a lot. It means that it's still in control of this active bearish sequence that we've seen that could take us lower. Here is your active bullish sequence that made a lot of people money long, and then that's when it changed there. So what we want to do is look for an inflection point to start a different sequence, or you stay with the prevailing one. And as of right now, the active sequence is to the downside, and it could change the speed and trajectory by getting back above this. That would push the bears back. If all of a sudden we opened up and when red in an hour, then it's still the same kind of thing. So I would look at Apple and Tesla. Do they hold up or not? Maybe NVIDIA and AMD have been leading indicators to the downside. Some guys were asking me about Meta. Like, Red Dog, what about Meta? Well, this is where the low of the year is, okay? There are a lot of big-time Meta bulls out there right now. But to be honest, if the S&P is going to retest the lows of 36, 36, and this is, not even 5 to 10 points away from those lows, why would you be thinking this is, already hit a bottom? You have to be in the camp almost that the bottom was on Thursday. If the bottom was on Thursday of last week, then maybe there's something here. And then if you look at the weekly chart of Meta, which led us lower for the last few months, this does not look like a bullish chart. Obviously, you can always look for a divergence and a change, but here this looks a lot like ARK. Instead of topping in February, it topped in September, and then gave you a high-level triangle that broke to the downside, another one, and right now it's a pebble throw away from 154. So if we are going to be breaking Thursday's low, okay, or Friday's low, this 154, in my opinion, is not going to hold any of 137, 123. Okay, there are already charts and that happening. So again, buying here is probably better than if you added here and bought this whole way down. But again, using the moving averages, this is this is not a quality, awesome stock anymore. This is something that maybe could be reborn and rebuild, but for now, if you're long actively meta, that means you're thinking to yourself that the low is in from Thursday, Friday, and that's not going to be breached this week, which could happen. It could be the same thing. Same thing if you know, what else is like in this kind of camp? Well, I already showed you in the video that broke below it. You know, we'll see what if there's AMD play catch up and see 7160. I remember when I showed you this head and shoulders top pattern, people were like, there's no way that that could be valid. And then meanwhile, I went to 71, came back, made a lower high, broke right here. So we'll see. You know, maybe if again, if you're in the camp that last Thursday's low, Friday's low is the low, then maybe you could buy verse 7160. If that's not the case, it's going to retest that and maybe go lower and follow in the video. But we'll see. So all the little things in your head. Either which way, plug held well. Yeah, there are some things that did hold well, and there are some things that you could look to. Okay, guys have been telling me, oh, look at the relative strength in plug. Yeah, it held, but still kind of ugly. Here, broke above. You know, this was a nice setup here when you had your gap above resistance. It held, let the moving averages catch up and give you a nice play. Now it's kind of a choppy mess. So I wouldn't be hiding in plug. Plug's the trade you do when you're in a stronger market. But again, you want to look for things that are far away from their lows. So this way, when the market does turn, you know, there's 2 or 3 different types of trades when markets make a bottom. Like there was a stat out there that, you know, most NASDAQ stocks on the June lows, they made a move of 40% off the lows. But those names that made a 40% move off the lows might have been 70 to 90% off their highs. So if you could time it, listen, I call that the trash, you know, the treasures for trash trade. I love that trade because a lot of people, you know, they're catching a falling knife on it, and then all of a sudden you see a big day one on volume, and you know that could start a new active sequence where you can make some money. Okay, and a lot of those, but again, to time those, you have to be a professional and a prop, you know, like we all are. They're like, let's take a quick look at pins. You know, pins was, you know, from wherever, from 79 down to here. Yes, it's off the lows, but this is something, again, you're going to need meta not to make a new low for pins to continue to hang up here. So that's a decent kind of setup, but we'll see. It's hanging in here. In order for it to get above 24.25, it's got to hold that. But we'll see. If we're going lower, this is not going to hold that area. I remember Peloton, you know, yes, Peloton went from 145 to like 8, and I caught a great trade from like 9 to 1150, which was 25% off the lows. So that's why that trade is juicy. But, you know, usually if we're going to bottom, you know, you might not get the best move off the lows in a relative strength group, but you'll get the most sustained move back through new all-time highs. So there's lots of different ways to do it. You just got to simplify it for yourself. If you think about too many things, you're never going to execute. If you have, you know, too many names or groups or indicators, you're never going to know when something changes. So you just simplify it. So like again, for today, yes, I'm running out of time. Sorry about that. I got 40 charts I got to do. For today, we're going to simplify it. Okay? Does the SPYs stay below 396-ish? If it gets above it, hey, maybe it's pushing the bears back a little bit from Friday. Does Apple stay green? Does Tesla stay green? Do the Q stay green? Does ARK stay green? Okay, which stocks go red first and stay there? Because remember on Friday, some of the tech names went red, and everyone's like, why are the tech names red? That we should be holding up today. I'm like, you know what? Maybe it's just a little, you know, maybe it's a little pushback. And then all of a sudden, they regrouped, and then later in the day, those stocks that went red first on Friday morning were at Thursday's low faster than anything else. So there's always little clues. So either which way, it's 6:59. I'll post a few charts after. Go hang out with the Alpha team and make about 40 charts with lots of different levels on them. And then I have to do mega cap tech, and then I got to do FANG, and then I got to do energy, then I got to do some semis, I have to do the one-offs, and then, you know, get ready for the morning call again at 8:15. You know, so if you're getting some value here, you get a hell of a lot more value with the Alpha team and with you know, Red All Access. Scott at t3live.com. I can send you the trade counselor, or you know, just if you're maneuvering and you're doing well, congratulations. If you've been kind of chopped up in the last few months and you have a lot of paper cuts, but you're still standing strong, continue to stand strong, continue to feed the brain. In the next 3 to 4 months, there's going to be massive opportunities, so you don't want to be tired, you don't want to be frustrated, you don't want to be, you know, having things against you. You want to be fresh and ready to go on all time frames, because again, like you know, we're 9 months into this bear market in the S&P, and we're 18 months into this bear market, or from the top of high growth. there's once the dust settles and things start fresh, those are when the biggest opportunities happen, and the only ones who can be able to see them are the ones that have a refreshed brain and that are following the right people and have a process and plan that works for them. So that's the major takeaway here. Good luck today, guys. We'll see if the early strength holds. You have your levels to speed, whether they negate Friday's action, and look at your indicators, your leaders, and you know the drill. I'll see you guys tomorrow.